Every second you watch this video, the world goes another $1.4 million deeper into debt. By the time you finish, humanity will owe roughly $100 million more than when you started. And here is the strangest part. Almost nobody is asking who we owe this money to. We talk about global debt like it is a problem we accidentally stumbled into, like generations of politicians just happened to spend too much, like if we all tightened our belts and balanced our budgets, we could eventually pay it off and start fresh. But what if that is not how it works at all? What if the debt is not a bug in the system but the system itself? What if global debt keeps growing because it was literally designed to keep growing? And what if paying it all off would not save the economy but collapse it entirely? This is the hidden mechanism that almost nobody talks about, and once you see it, you cannot unsee it. Let us start with a number that should make no sense. Global debt right now stands at roughly $315 trillion. That is not a typo. $315 trillion. To put that in perspective, if you stacked 315 trillion $1 bills on top of each other, the pile would reach the sun, and then past it, and then to the sun again. The entire global economy produces about $105 trillion worth of goods and services every year. That means the world owes 3 times more than it makes. If Earth were a person, no bank would approve this loan application. And here is what makes it even stranger. This is not a recent problem. Debt has been growing faster than the economy for decades. Not during recessions, not during crises, all the time. During booms, during busts, during peace, during war, the debt just keeps growing. Economists will tell you this is fine. They will say debt is different for countries than for households. They will say we owe it to ourselves. They will throw around terms like debt sustainability and monetary sovereignty and hope you get bored and change the subject. But something about those explanations never quite answers the basic question. If this debt is so manageable, why does it never go down? Why does it only ever go up? The answer is hiding in a mechanism so fundamental to modern money that most people never learn it exists. And it starts with a question that sounds too simple to matter. Where does money actually come from? Most people assume money comes from the government. That's somewhere in Washington or London or Brussels. There are giant printing presses churning out cash that gets distributed through the economy. And that is sort of true. Governments do print physical currency. But here is the thing. Physical cash makes up only about 8% of all money in existence. The other 92% exists only as numbers in computer systems. So where did those numbers come from? The answer is banks, not central banks. Regular commercial banks, the ones with branches on your street corner. And the way they create money is so simple it sounds like a magic trick. When a bank gives you a loan, it does not go into a vault and take out money that someone else deposited. It does not borrow the money from anywhere. It simply types new numbers into your account. That money did not exist before. Now it does. The bank created it by making a loan. This is not a conspiracy theory. This is not a fringe interpretation. The Bank of England published a paper in 2014 explaining exactly this. Quote, when banks make loans, they create new deposits in borrowers' accounts. They add new money into circulation. End quote. Read that again. Banks do not lend existing money. They create new money, and they create it through debt. This is the first piece of the hidden mechanism. In our modern monetary system, money and debt are born together. They are twins. Every dollar in your wallet, every digit in your bank account came into existence because someone somewhere took on debt. A mortgage, a business loan, a government bond. Debt is not a side effect of money. Debt is how money gets created. Now follow the logic. If all money is created through debt, and if debt comes with interest, then the total amount of money owed is always more than the total amount of money that exists. Let me say that again because it sounds impossible, but it is mathematically true. If every dollar is born as a loan, and every loan must be repaid with interest, then the debt is always larger than the money supply. There is literally not enough money in the system to pay off all the debt. This is not a crisis. This is the design. The only way the system keeps functioning is if new loans constantly get created to bring new money into existence. New money to pay off old debts. New debts that will need even more money to pay off. And on and on. Forever. This is why global debt cannot stop growing. Growth is not optional. It is the oxygen the system breathes. Now you might be thinking this sounds unsustainable. Like a Ponzi scheme with extra steps. And you would not be entirely wrong. But the difference is that Ponzi schemes eventually run out of new investors. This system runs out of nothing because it creates what it needs out of thin air. As long as people keep borrowing, money keeps existing. As long as economies keep expanding, the game continues. Debt growing faster than income is not a warning sign in this model. It is the model, but here is where it gets genuinely strange. If banks can create money from nothing, why do we act like money is scarce? Why do governments cut social programs saying they cannot afford them? Why do we have recessions where suddenly there is not enough money going around? If money can be created by typing numbers into a computer, why does anyone go without it? The answer is that money creation has rules, not physical rules, institutional rules. Banks can create money, but only through loans. And loans only happen when someone wants to borrow and the bank believes they will pay it back. When the economy is booming, everyone wants to borrow. Businesses take loans to expand. Consumers take loans to buy houses and cars. Developers take loans to build shopping malls. Money floods into existence. But when confidence drops, borrowing slows down, banks get nervous about who will pay them back. Fewer loans mean less money creation. The money supply starts shrinking just when people need it most. This is a recession, not a shortage of physical resources, a shortage of willingness to create debt. And this creates a very uncomfortable dependency. The entire economy depends on a continuous expansion of borrowing. We need people to keep taking on debt. Not because we are greedy. Not because we are irresponsible. Because that is literally how money enters the economy. Central banks understand this completely. That is why their main tool for fighting recessions is lowering interest rates. Cheaper borrowing means more money creation means economic activity. And when inflation gets too high, they raise interest rates. More expensive borrowing means less money creation. Means slower economy. The entire system is a debt throttle. Speed up borrowing, economy grows. Slow down borrowing, economy shrinks. The debt is not a side effect. It is the engine. Now let us zoom out to the global scale and watch this mechanism go completely haywire. Remember that $315 trillion number. Let us break it down. About 1/3 of global debt is government debt, countries borrowing to fund operations. Another third is corporate debt. Companies borrowing to invest, expand, or sometimes just survive. The last third is household debt, mortgages, car loans, student loans, credit cards. Each of these sectors has spent the last 50 years on a borrowing escalator that only goes up. Start with governments. In 1970, advanced economies had average government debt around 40% of their GDP. Today that number is over 110%. The United States alone carries $34 trillion in federal debt. Japan is at 260% of GDP. These are not temporary spikes from emergencies. These are permanent elevations. Every crisis adds debt that never gets paid down. Corporations are the same story. Non-financial corporate debt has roughly tripled since 2000, and much of this borrowing did not go toward building new factories or hiring workers. It went toward buying back company stock to boost share prices. Debt taken on not to create value, but to create the appearance of value. And households have played their part. Mortgage debt, student debt, auto debt. The average American household carries over $100,000 in debt. In many countries, people spend their entire lives paying interest on loans for houses they will never fully own. Every sector, pulling in the same direction. More debt, more money, more growth, until someone asks the obvious question, what happens if this stops? So here is the truth that nobody wants to admit. The debt will never be paid off because it was never designed to be paid off. We are living inside a system where growth is not a choice but a requirement, where stopping is not an option but a guaranteed collapse. Every dollar created carries within it a debt that demands even more dollars to be created tomorrow. This is not corruption. This is not incompetence. This is the fundamental architecture of modern money itself. The question is not whether this system is sustainable, because mathematically, it cannot continue forever. The real question is what comes next, and whether humanity will design something better before circumstances force our hand. For now, the machine keeps running, the debt keeps climbing, and the clock keeps ticking at $1.4 million every single second. You did not create this system, you did not choose it, but you are absolutely living inside it. And once you truly understand how it works, you can never look at money, debt, or the global economy the same way again. The mechanism is not hidden anymore. The only question remaining is, what are we going to do about it?